All right, guys, I'm just going to do a breakdown of a trade that I just entered that I think would be interesting for some of you guys. Not to copy this trade, not because right, you should take this trade in any way, shape, or form, just because I want to give kind of a breakdown of more of my discretionary trades. Now, again, over Stats at Trading, we do systematic trading a lot where I'm essentially building systems, the Discord bot, or you can set the alerts yourself alert you when systems these symbols from the systems occur. So right, the system on Sunday says look at Apple. If it breaks its price, an alert will get sent through. You'll know the probabilities and all that. But I still like to take discretionary trades, and the main reason for that is I want to stay involved in some discretionary way in the market, because that's where I'm going to really figure out which ones are working well and which ones aren't when it comes to new ideas, right? So I'll develop ideas just by watching the charts of discretionary trades. So this is one that I was on Trader TV this morning, and if you missed that, I'm on every Monday and Friday mornings at 8:45 Eastern, and I was talking about UNG. So very basic idea, and if you look, this orange line right here is a 200-day moving average of UNG. Look how much it respected this line. Every time we hit this line on UNG, when we're under it, we got rejected. Back here, it pulled back to it when we were above it, and we hit it. So again, the 200-day moving average has been really, really big for UNG. We broke it, and now we pulled back on Friday and tested it, and then we gapped up today. So that's my idea. My idea is, hey, 200-day moving average seems really important. I think it's a good risk reward trade. That's the main thing. I always look at every trade that I take, unless I know the statistics behind it, that it's going to be a 50-50, right? I'm either going to be right, I'm going to be wrong. I don't know. It's 50-50 chance one way or the other. But what do I think the risk reward is? So I just entered, and the reason for it is that this 30-minute chart, you can see we pulled down off the open, and I said, okay, if we get back through $17, psychological number, almost random, then I'm interested in getting involved. Just the market is showing some strength and some buying. I'm wrong if we close under this moving average. So call it $15 roughly a share. And then I look at it and say, well, what happens if I'm right? Well, if we get back even into this consolidation back here, that is $27, $28. Let's say 30 bucks. So let's say um, I'm making $10 a share and I'm risking $2 a share. Well, if we go by my 50-50 win rate, then I'm risking $2 to make 16. So what, 8-to-1 risk reward ratio? I have to take those trades. I have to take 8-to-1 risk reward ratios. I just must. And it's good to know that when I take these trades, if I assume that I'm not very good, but I still think it has a positive EV or a positive expected value, then I should take the trades. Now, the thing to note about natural gas that I have to keep in mind is I've got to skew those numbers in my head, because it's very common for natural gas to gap up a lot and to gap down a lot. So it's good to take whatever you think your out will be and add a little bit to it. And whatever you think your reward would be and subtract a little bit. So let's say I'm out at 14. So I lose $3 a share. And let's say instead of $16, I only make 10. That is still a 3-to-1, roughly, risk reward ratio. Just again, more of a rant video of just how I'm seeing things when I take discretionary trades. Let's just say I'm right, a coin flip, right? Um, do I think the risk reward makes sense? And if the risk reward makes sense over the long run and it's that positive expected value, then you want to take the trade. So again, just the way I think about a trade and some technical analysis on natural gas.